A lot of the recent additions to the Action Alerts Plus portfolio have had more of a global exposure. Now, Stephanie, this is a little bit different from the strategy you were taking before. You had focused on domestic. The S&P and Dow, they're reaching new all-time highs. Is it just that you see more opportunity abroad?
Well, what I think is this rotation that you're seeing into the cyclicals away from the defensives is another means for the market to kind of continue to slowly creep higher, because these groups, and by that I mean industrials, mining, financials, tech, discretionary, they've absent discretionary, these groups have actually lagged versus the defensives. And so I think as you see this rotation happening, you can actually kind of grind your way higher in the market. Certainly I see more upside to these groups than I do the defensives. And a lot of that was sparked by the global monetary policy changes, right? So we had the Fed talking about they would do whatever it takes, they would put more into the system, they would reduce it depending on the data. Then you had the ECB talking very much the same thing, saying that they would do whatever it takes. And then you had Australia lower rates, you had India lower rates. So you have this continuation of global monetary policy ease and liquidity. And that's hard to fight, Lindsay. And it should lead to growth in the second half of the year and into next year. And if you believe that, which I do, you do want to be owning the cyclical stocks that are going to benefit from that uptick in growth. And then you add on the cheap valuations, and you add on, many of these still have dividends, very attractive dividends. It makes for an easy recipe to be buying these names.
Okay, now earnings season, we're kind of wrapping up here. We've seen a lot of companies beat on the bottom line. The top line's been a little bit lighter. And I recently saw a chart where you're seeing the price of the S&P going all the way up, but we're seeing estimates come down, and it's creating this huge gap. So is that a big risk to either the defensives or the cyclicals?
It's a risk, and I will tell you what else is a risk. What keeps me up at night is the strong dollar, right? Yeah. So these global companies, it's a tough headwind. So I get all that, but I would just say, again, if you go back to the valuations of, let's say, the defensive, let's just say the staple stocks, a Mondelez, for example, a Coke, for example, an Altra, 17, 18 times forward estimates for 2 to 3% organic growth. You go to something like an Eaton, and it's trading at 11 times earnings, and they actually just beat numbers, and they're doing a fabulous job on the margin side. So I think that you have to, it's a stock picker's market. You don't want to be all in cyclicals. You don't want to be all in defensive. You want to have a blend, but I do think that the cyclicals will continue to outperform, even in the face of kind of a challenging earnings environment. And I think they're doing a very good job on the margin front. And again, I think that it speaks again to the valuations. You've got to be very valuation centric. And it's hard for me to go out and buy 18 times earnings for 2% growth when I can get 4 to 5% organic growth for 11 times earnings. This is nothing to be celebrating about, but that's where the opportunities are.
Okay, and do you think it's time to build a little bit of cash and wait for some opportunities if the market does pull back?
We've sold off a lot. We've made a lot of changes in the last couple of weeks, taking profits when we have them. And I think that's very smart to do. So we have about 8% cash now, which is a little bit higher than we have had. And I think that is definitely prudent, because you do want to be able to take advantage. And when these high quality blue chip global companies go on sale, you do want to be able to take advantage of that.
Okay, well, it's build some cash right now. Look to the cyclicals, but don't stay completely away from the defensives. It's a stock picker's market out there, so have fun with it.